Ever get the feeling that everything in the economy is just a bit off right now? Inflation keeps creeping up, growth is slowing, and everyone's whispering about a possible recession. Will it be a big one? A short one? No one really knows. Even the experts are keeping their options open. But here's what's certain. In times like these, volatility rules the markets. When spreads widen and trading volumes spike, some traders clean up. But don't be fooled. Volatility isn't always good. Sometimes it just means chaos with little opportunity. This time, the volatility brought profits. Next time, who knows? Amid all this uncertainty, recession fears, geopolitical flashpoints, and economic jitters, Jamie Dimon, CEO of JPMorgan Chase, just dropped a brutally honest interview. No sugarcoating. He called out the wild swings triggered by war, inflation, and trade tensions, and warned that this era of constant uncertainty isn't going anywhere. But beneath the caution, Dimon's message was clear. Smart money is quietly moving back into stocks, and it's being driven by a force that's reshaping everything: artificial intelligence. While many investors are frozen by fear, Dimon sees AI as the biggest game changer since the dawn of the internet. He believes it's powering productivity, boosting corporate profits, and setting up the next long-term bull run. And he didn't mince words. If you're betting against AI, you're already losing. You don't have a divine right to succeed, he said, but if you don't adapt, you'll be left behind. JPMorgan isn't just talking the talk. They're putting real money behind their conviction. Not only are they holding strong on the so-called Mega 7, Apple, Microsoft, Nvidia, Amazon, Google, Meta, and Tesla, they're quietly increasing their stakes. But here's what most investors are missing. JPMorgan is also building positions in a new wave of AI-driven stocks. These aren't the obvious names. These are the companies riding the second wave of AI adoption. In this video, I'm revealing 3 overlooked AI stocks JPMorgan is buying aggressively. Stocks that could become tomorrow's surprise winners as capital rotates and attention shifts. Let's dive in. First up, Salesforce. While everyone's watching Nvidia and Microsoft grab headlines, JPMorgan has quietly boosted its stake in Salesforce by over 20%, now holding more than 23 million shares worth about $6.2 billion. This isn't just a bet on software, it's a conviction play on where AI is being deployed at scale. Salesforce has really transformed from a CRM company into a full-stack enterprise AI platform, rolling out tools like Einstein AI, Agentforce, and Slack GPT. They're weaving AI into every layer of customer engagement, workflow automation, and enterprise productivity. Their new agent-based solutions now handle up to 60% of service cases autonomously, and honestly, that's just the start. Despite a slowdown in revenue growth to 8% year over year, Salesforce remains a cash flow machine with $14 billion in cash and a rock-solid balance sheet. Even conservative estimates suggest net margins of 35 to 40%, profitability that most AI companies can only dream of. That's why JPMorgan sees Salesforce as one of the most mispriced opportunities in today's AI rotation. Next up, ServiceNow, ticker symbol NOW. So often overshadowed by those flashier tech giants, ServiceNow is actually becoming a backbone of the AI-powered enterprise revolution. And you know, JPMorgan is definitely taking notice. In the most recent quarter, they bumped up their position by 12%, now holding over 7 million shares worth about $5.7 billion. That's real conviction. Why is that? Well, ServiceNow isn't just adapting to AI, it's engineering it. Their next-generation AI agents are now the core operating layer for IT, CRM, HR, and security workflows. Fortune 500 clients are already seeing some real productivity gains, automating troubleshooting, streamlining customer service, and even detecting network vulnerabilities. The acquisition of Moveworks brought AI-powered employee automation right to the front lines, impacting everything from HR to finance. Revenue is up nearly 20% organically, and their footprint in the public sector is expanding fast. Analysts are assigning a fair value of $99 per share, And JPMorgan is doubling down as the AI wave shifts from infrastructure to workflow intelligence. And finally, Broadcom, ticker symbol AVGO. This is the AI infrastructure play hiding in plain sight. Last quarter, JPMorgan increased its position in Broadcom by over 15%, now holding a massive 91 million shares worth $15.3 billion. That's not hedging, that's a power move. Broadcom just reported a 25% jump in revenue and a staggering 45% surge in earnings per share, driven by explosive demand for its AI semiconductors. But here's the twist. Broadcom isn't trying to be the next NVIDIA. Instead, it's carving out a niche with custom silicon tailor-made for AI hyperscalers like Google, Meta, and ByteDance. These chips are built for the high-performance, low-latency demands of next-gen AI workloads, making them nearly irreplaceable. AI now accounts for almost 30% of Broadcom's revenue, and it's growing fast. Their acquisition of VMware is adding software synergy, with 70% of top enterprise clients already adopting VMware Cloud Foundation. Despite short-term headwinds and a recent stock dip, analysts still see over 20% upside. For JPMorgan, Broadcom is the perfect blend of deep AI integration, high-margin growth, and long-term defensibility, a hidden AI gem. So, there you have it. 3 under-the-radar AI stocks JPMorgan is quietly loading up on, while the rest of the market is just starting to catch on. If you found value in this deep dive and want to stay ahead of the next big investment wave, hit that like button, subscribe, and turn on notifications. You won't want to miss what's coming next.